Hello class, and welcome. Have you ever looked at your banking app and seen a balance that didn't quite match what you expected? It's a common issue, and for businesses, it's a critical one to solve. Today, we're going to learn the essential accounting procedure used to solve this, the bank reconciliation. A bank reconciliation is an important control used to match the cash balance on the company's books with the cash balance in the bank account. These balances often differ due to timing differences or errors. For example, the company might record a deposit immediately, but it takes a few days to show up at the bank. Or, the bank might deduct a service fee that the company doesn't know about until it sees the statement. Let's look at our example company, Starlight Productions. According to Starlight's own cash records for March, their ending cash balance is $34,600, but the bank statement for the same date shows an ending balance of only $26,400. Our job is to figure out why these numbers are different and to determine the true reconciled cash balance. Before we start, it's important to address a common point of confusion. On a bank statement, deposits are often called credits, and withdrawals are called debits. This is the opposite of how we record cash in accounting. This is due to a difference in perspective. When you deposit cash, the bank views it as an increase in its liability to you. A bank reconciliation has three main steps. First, reconcile the bank's balance. Second, reconcile the company's balance. And third, update the company's records. We are going to build the final reconciliation statement piece by piece. Step 1 is to reconcile the bank's balance. We look for items the company has recorded, but the bank hasn't yet. By comparing the company's cash receipts to the bank's deposits, we see a deposit for $8,500 made on the 30th of March that isn't on the bank statement yet. This is a deposit outstanding. We add this to the bank's balance. Next, comparing payments, we see check number 295 for $5,400 is in the company's records, but hasn't been cashed yet. This is a check outstanding. We subtract this from the bank's balance. After these adjustments, the reconciled bank balance is $29,500. Step 2 is to reconcile the company's balance. Now we look for items on the bank statement that the company hasn't recorded yet. Let's start with additions. The bank statement shows a note collected of $2,000 plus interest of $200. The company didn't know about this until seeing the statement, so we add these to the company's balance. Now for subtractions. The bank statement shows an EFT for utilities of $4,100, an NSF check or a bounce check from a customer for $2,800, and a bank service fee of $100. We also discovered a company error. A debit card payment for advertising was recorded as $3,000, but was actually for $3,300, so we need to deduct the $300 error. After subtracting these items, the company's reconciled balance is also $29,500. They match. This is our goal. We have successfully reconciled the balances, but our work isn't done. Step 3 is to update the company's cash account. We must record journal entries for all the items we used to adjust the company's balance. We do not make entries for items on the bank's side, like outstanding checks, because those are already correctly recorded in our books. First, we record the cash increases. We debit cash for $2,200 and credit notes receivable for $2,000 and interest revenue for $200. Second, we record all the cash decreases. This is a compound entry where we credit cash for the total of $7,300. The debits are to utilities expense for $4,100, accounts receivable for the $2,800 NSF check, service fee expense for $100, and advertising expense for the $300 error correction. By posting these entries, we update Starlight's cash balance from $34,600 to the true correct balance of $29,500. Let's summarize. The bank reconciliation is a process to identify timing differences and errors. We adjust the bank's balance for items the company knows about, but the bank doesn't, like outstanding checks and deposits. We adjust the company's balance for items the bank knows about, but the company doesn't, like service fees and interest received. Then, we journalize the adjustments to the company's side. This process gives us the reconciled cash balance, which is the true amount of cash the company has and is a vital control for managing a company's most liquid asset.